In this channel, our slogan is, if I no understand am, I no go talk am. Say it again, if I no understand am, I no go talk am. So in this video, I am going to show you 5 practical ways in which you can reduce your tax in Nigeria. So I'm going to start listing them. Make sure you carry your pen and paper and jot down these 5 key points. So the number 1 on my list is to increase your pension contribution. So for example, if you have been paying your pension, let's say you are paying 10% every month, you can increase it to 30% or even 25%. When you do that, you are going to be saving money, because any money that you are putting in your pension account is not taxable. Government will not tax you in your pension account. So if you are putting money there, is a smart way of saving money, and the money will not be taxed. The second one on my list is to ask for tax-friendly allowance. Now, what do I mean by ask for tax-friendly allowance? For example, in some company, they used to pay transport allowance. They used to pay what they call it, food subsidy. That's a food allowance for those of us that used to go to the office. They used to pay. They will give you food and all those things. They also pay for internet allowance. Sometimes they used to pay what they call leave allowance. So all these allowances, you can ask them to increase it. You understand? That's the trick. So you can ask them to increase it. By the time they increase it, and any money that you put in your allowance is not going to be taxed. It's not going to be taxed. So, for example, if your salary is 200,000, you can ask them to increase your leave allowance. Maybe they can be giving you 50,000 for leave allowance. You understand? They can also be paying you for internet allowance, maybe 20,000 or 50,000. So by the time they remove 50,000 for leave allowance, remove 50,000 for internet allowance, your salary is remaining 100,000. So by the time they pay you 100,000, government will not tax you. You understand? So that's a smart way in which you can, reduce the level of tax you are going to be paying from 2026. You understand? So the third one on my list, invest in government bonds. Invest in government bonds, state bonds. Make sure you invest in it, because one thing about investing in government bond is that you are investing your money, and government is paying you interest, and your interest is not being taxed. Your money is intact, everything is intact. You can just go and sleep. You understand? Nobody is going to touch your money. So invest in government bond. That's another way in which you can reduce the tax you are going to be paying from 2026. Invest in government bond. If you don't understand what government bond is, ask your accountant. Go to your bank, ask them. They will give you information on how you can buy these government bonds legally without any problem. Don't go and ask people that are not knowledgeable about this. Go to your bank, ask them how you can buy government bonds. They will tell you how to buy it, and you can start investing there. The money will not be taxed, and at the end of the day, you'll be getting interest for your money. Now, the fourth one on my list is claim your business expenses clearly. Like, make your business expenses, make sure you have receipts for your business expenses. Let's say you are working 9 to 5 and you also have another business. So make sure you have all the documentation, every expenses you are making in your business, make sure you have it. And if you're a business owner, let's say for example you are making 200,000 every month, you can, that's another way again, you can actually increase your expenses. For example, electricity. If you know you are running a business with generator, government is not providing light for you, at the end of the day, if you are making 200,000, make sure you increase the bill, the money, increase it to 2. You can say you bought for 100,000. You bought for 100,000, you bought internet 50,000. At the end of the day, what you made from a business is 50,000, and that is what you declare as your profit, because it's your profit that are going to tax. What the government will tax is your profit. So you declare 50,000 as your profit. So from that profit, they will tax maybe 10% of. At the end of the day, you are paying lesser tax. Don't go and say money na water, money na water. You go and declare 1 million. That's what your business is making. If you declare that, the government is going to tax your profit, and you will pay heavily for it. So use your head, be smart. So the fifth one on my list is separate your stream of income. The fifth one, separate your stream of income. For example, you have a business and you're also working 9 to 5. So separate your salary money from your business money. Don't go and add them together. When you add them together, they are going to tax you heavily. So separate it. Your 9 to 5 salary money should be in another account. Your business money should be in another account as well. So that when the government want to tax, they know which one they will tax. Don't go and put them together, because when you put them together, they will tax you and you will pay heavily for it. Understand? So use these 5 tips wisely, and make sure you follow this channel, and make sure you subscribe.